The broadcast is now starting. All attendees are in listen-only mode.
Hello guys, how are you all? Can you please write in the chat that can you hear me or not? Am I audible enough to you? Am I clear? Hey guys, please check out the chat and please write your comments here so that I can start. Okay, I can't see anyone yet. Hmm. So shall we start guys? I'm waiting for the chat to ping up. Okay, I think there's some problem here. And yes. Okay, people, I think we'll start. I mean, you can all see. Yes, hello, we can chat on this webinar. Okay, guys, can you just see my screen? As maybe you are not able to write in the chat because I think there's some setting that needs to be done. So if you have any queries, if you have anything, you are free to PM me on this FB account. So I will revert back to you as soon as possible. Okay, I can see. So we are ready to start with it, guys. Okay, let us start. So now I have the confirmation that you can listen to me. So let us start. So first of all, let me start with the introduction. This is your host, Jerry Williams, and today we are gonna love this amazing webinar as we start learning. As I said, we'll be learning from the scratch. I know you guys have been trading, or some of you are newbies in this like industry of trading. You don't have any idea about how to trade, or you just hop on to catch the signals and you have some losses. So we'll be starting from the scratch. I know many of you are newbies here, so let me first conduct a short poll to just get an idea of everyone's experience in the trading industry. So just let me go to the poll section. Yeah, okay. Okay, guys, you must be viewing a poll in progress. So can you please answer according to your experience, or I mean, according to what do you think? I mean, are you a newbie or you are slightly experienced? Please answer it. So we can see 75% yes and now 67% yes. Okay, I'll I'll just be closing the poll in a while. Just 30 seconds more and I'll close it. Okay, 93% of you have already voted. So. Okay, guys, it's already 1 minute and I'm going to close the poll. Yeah. Okay, 93% voted, and 69% people say that they are newbies in this binary options industry. Okay, so I had this poll just because I wanted to know that all of you are newbies or some of you are newbies, because according to this, I'll increase or decrease the level of this webinar. It's just as a reminder, I want to tell you that trading is very, very simple if you are disciplined and have calculations in your approach. You need to have discipline, you need to have calculations, you need to have patience. You need to be patient in order to make consistent profits in trading. So as I said, we'll be starting from the scratch. First of all, just let me hop onto our website. Yep, you can see our website, and I have uploaded some educational material under this section in the website, and you can just go on, and there are certain strategies, you can just check them out anytime you want. Also, I have given 3 handouts in this webinar. You can just go to the handout section. The first one is about brokers and scammers. The second one is about your problem, the risk reward ratio, the killer problem in binary options. And the third one is about understanding the novice trading habits. As you all are novices, you need to understand how you can manage your risk, you can manage your account onto yourself. There is a question that everyone wants to know. They need to know why most of the traders fail. Um, you must have heard that more than 90% of the traders, they fail to make money in trading. Hundreds of thousands of people all over the world trade stocks, option, commodities, forex, and more. All of these investors hope to be successful, but the fact is, most are not. The reasons for failure in this market are as varied as the traders themselves. Both for the great majority, it comes down to the approach of trading. The approach you have yourself, the approach you have towards trading. Everyone has his own style or his own strategy towards trading. So, when traders allow emotions like greed and fear to play in their decisions, they are bound to fail. Simply don't let your emotions ride yourself up or down. Also, relying on hunches, guesses, tips from more friends, or even the advice of your broker. Many of you have your brokers letting them trade for you. Please don't do that. This will likely be, you know, a great disappointment for you. What a successful trader is all about. Because you need to start trading and you need to understand the psychology of a trader. A successful trader has several things. The first one is he or she leaves emotions out. The second one is their trades are pre-calculated. They have calculations about their risks and their rewards. And third, they have a plan and manage their funds very well. Again, of course, no one can predict the future, but remember, successful traders are about beating the odds and making more winners than losers and protecting one's profit. I again highlight protecting one's profit. All of you, or some of you, may have some days that you rose your account balance significantly, and the next day it was boom. And sometimes you are you have blown away your account. Entire account is wiped out. So let me first start with the basic difference between forex and the binary options. Guys, binary options means simply shorter expiry times. It may vary from 60 seconds to 1 day or 2 days, something. This has nothing to do with the forex industry, but the forex charts that you see, you need to understand them, because it's the consistent price action that governs the behavior of a binary option broker's chart. Or it's simply that you need to understand the forex charts in order to have your calculations, in order to have your premonitions about how the market is going to react and how the market is going to go in the next few minutes or in the next few hours, or some things like that. There are several factors governing currency. These may be fundamentals, these may be technicals. So first of all, I want to clear everyone that forex trading or binary options trading involves a substantial risk amount. So guys, Please be very calculative in your approach before investing, or please be very reasonable with yourself. You need to accept things as they come. So let me first establish the basic difference between forex and binary options. Guys, the forex market is the biggest market in the world with around 4 trillion turnover a day. I mean, the mostly traded currencies are USD, Euro, JPY, GBP, AUD, the Swiss franc, aka CHF. In Forex, we mainly go for long term. I mean, we have our stop losses, we have our target points, we have our analysis, and we can go for longer expiries. We can go for a week or a 2 or a month. I mean, depending upon your analysis. In binary options, it is simple that you have shorter expiries ranging from 60 seconds to 1 day or two. It is a lot simpler, I must say. So just let me check onto this message for a minute. What does he say? I mean, I don't want. Okay, your voice is breaking and there is no sync in audio and video. Okay, guys, is my voice clear? Can you please message me here? Is my voice clear? Because I can see in the chat, so you can please PM me here and I'll let you know. Can you please PM me? Yep. Okay. Yes, I can listen and see your screen. Okay, guys, fantastic. Maybe some of you may have some slower internet connections, and that is the case. So I'll just carry on with the presentation. Okay, guys, so in the forex market, just let me hop onto the live chart so that I can be more clear. Okay, this is our website, our free website. We have newly launched this website for you all. Okay, it's loading, and yep, here is the forex chart. Okay, in the binary options in the industry, it is a lot simpler. I mean, you have 60-second expiries and you have variable amount of time frames starting from 60 seconds. You can have 15 minutes, 45 minutes, 30 minutes, an hour, or 2 hours. So it's a lot simpler. But the main difference comes because you can start a binary options account with $250 or $300 or maybe $10-20 with small investments. But in forex, I mean, when you go to try forex trading, you need to have minimum $500 of balance if you need to have consistent profits. Consistent, I mean significant. You can just calculate. I'll just give you assumption that with a $500 balance, you can have $60 to $80 of profit every week with proper analysis. Maybe it can jump to 100 or 150, but you need to have very apt analysis. In binary options industry, you have profits ranging from 70 to 90%. You have a significant risk reward ratio. I mean, if you lose, you have nothing. You have 0%. And if you win, it's like if the option ends 1 pip higher for a call or 1 pip lower for a put, you are in the money and you are rewarded that ratio. But in the forex industry, you have spreads. Like for euro USD, you may have a broker spread of 1.5 or 2 pips. I mean, that spread difference is the place at which they make profit. They have their own spreads, they have their own platforms. So you need to look into this before you go to any broker. You need to see their spreads, you need to see what types of spreads they have on the main currencies. I mean, sometimes they have 5 to 6 pips of spread. So I'll just get into these details after some time. So you, while reading a forex chart, suppose this is a forex chart, you all can see. So the price right now is 2090.9, you can see. So while we read the chart, the basic reading we have is in pips. Okay guys, the pips, you need to understand, we are starting from the scratch and you need to understand what a pip is actually. I'll just break it down for you. What actually is one pip and what does a pip mean in the forex industry? Guys, a pip stands for percentage in point. It's the smallest price change that a given exchange, a currency can make, and an increase or decrease in it represents the profit or loss of a trade. So when the pips increase and you have a buy option, you make profits. When the pips decrease and you have a sell option, you are in profit in the forex market. Not different. There is a particular way to count your profit or loss in a market. So I'll just go on with it. Please, if you lost me somewhere, I mean, if you can't hear me, if you can't see my screen, this webinar is being recorded and you can see it after all. Okay, so I was just telling you about how to calculate the pips in the price chart. So guys, let us this all will be a hypothetical assumption. I mean, so let us assume that the current price that euro has is of 1.1088. Another thing I want to mention here is, like, most of the currencies, they are quoted to the fourth place of a decimal. Like euro USD, you can see 1.108. Just let me write it down here. Okay, it will be more clear. Okay guys, 1.1088. So guys, what you can see here is the price quote for euro USD. But to give you more precision and to give you more broader view of the price action, brokers can add the fractional pips. You must have seen that there is a fractional pip added in the end. It may be 3, like this. You have 5 digits after the decimals, and the last one is the fractional pip added for more precision, for more intuitive approach towards your trade. So, like, how to calculate a pip? So like the euro USD is right now on 1.1088, so you can see that it's up to the fourth place of a decimal. To calculate the value of a pip, you will simply divide, okay, like 0.0001, it's the fourth place after a decimal. You will divide it with 1.1088. Yep. So guys, this is what you get. This is the value for 1 pip in euro USD with that calculation, with that hypothetical assumption. It's the value of a pip in euro USD is 0.0009. In the forex industry, the standard lot consists of 100,000 euros or USD. I mean, the currency you're quoting, it's euro per USD. So for 1 pip, you will be gaining this much. You have been trading a standard lot. There is a 1 pip movement up and you have a buy option. So we'll just calculate the profit you will have. It's 0.00009. Okay, we'll just multiply it with 100,000. So for 1 pip, you'll be profiting around 9 euros or maybe around 10 to $11. It's not the exact figures, but according to that assumption, this is how we calculate a pip's value. So a pip value in euro USD according to that assumption is 9.19 euros. So like USD JPY, it's quoted to just two digits after the decimal point. I mean, you can say 120.80. If you want to calculate the pip value of this one, you can simply divide. Okay, it's to the second place of a decimal, it's 0.02 divided by 120.80. Okay, so this is how much you will be profiting on one pip. And again, if you are trading a standard lot, so into 11000, just one thing. Yep, it's on one pip you will be profiting around $16. It's as simple as that. I have tried to make it as simple as I can so that you all will be able to get catch of it. I mean, you can watch it later and again try to catch if it's not clear to you right now. So I'll be just moving on with my presentation. I was just preparing for this webinar and I just read somewhere that Forex is type of gambling. Guys, I want to clarify here that gambling is entirely a different thing. It's not gambling. I mean, if you think so that it's gambling or you can lose, you lose if you don't have calculations, if you are not disciplined. Trading, it's all about analyzing the markets, using charts to predict the future movement. It's knowledge, research, analysis. It has nothing to do with the luck. So please don't compare it with gambling or something like that. It seems so boring to me when people say, I mean, Forex is like gambling. Just go get a life, man. When you don't know how to get educated, you'll just say like this. And when you start educating yourself about how the market works, how we get into trades, how we execute them, it's all simple. I'm again emphasizing on the fact that please don't think that trading is a very complex subject. Guys, it's extremely simple and it's extremely approachable if you have the right approach. It's comprehensive, it's simple, it has nothing to do with luck. So please be with me. I'll just carry on with my presentation. I mean, you need to know these things as we're starting from the scratch. Okay, so how do we start first? If we want to start a Forex, you are trading Forex mainly in the binary options. So it's clear that Forex is the mother of the binary options if you are trading binary options with Forex. You may also have other stocks like Apple or oil or gas, I mean commodities. So when you're trading Forex, mainly the currencies, so the charts you have, they are all from the Forex market. It's all coming all the way along to you from the Forex brokers. So another thing, it's amazing. I mean, what I'm going to tell you, another thing we have in Forex is the leverage. With leverage, for example, what is leverage? It's simple. You can invest more than what you have. For example, if you are having a small decent account size of $500, okay, $500, and you have a leverage of 50 is to 1, it simply means you can trade as much as 50 times of this amount. It's into 50. Okay, so with $500 you can trade a currency up to $25,000. I mean, if you want to quote USD JPY and you have $500, you can quote up to $25,000. it's leverage. It's not a miracle. I mean, it's a double-edged sword where you can have significant amount of profits by this. You can also have significant amount of losings by this. Okay, so I mean, the leverage I use in my demo account, not in the real one. Okay, it's 100 is to 1. So just let us assume that I have 10,000 balance in my account and I have a leverage of 100. So I can trade a single standard lot with 10,000 balance. I mean, for a single standard lot, but with the leverage of 100, you can just trade it with only $10,000 in your account. Guys, please don't fall for leverage. I told you it's a double-edged sword. You can have significant amount of profit. On the other hand, you can have significant amount of losings too. Okay, so in trading, I mean, the forex market is open 24/7 and 5 days a week. There are main three sessions that we have in industry. So one is the European session, which is from about 7 to 16 GMT. It's all according to the Greenwich Mean Time. The North American session or the US session, it starts from 12 GMT and lasts till 21 GMT. The Asian session, it starts from 21 GMT and lasts till 6 GMT in the morning. Guys, the most volatile session among all of these three sessions is the US session, because a whole lot of traders are trading currencies. I mean, most of the volatility you will see in the market is in the US session, and during the Asian session the market is kind of, you know, it's dizziness is surrounding the market. It's a lull in the markets. And the European session, the GBP is very volatile. GBP is volatile all over the day. What I can see mainly in the European and the North American sessions, you'll see GBP is, I have seen more, I mean, the most volatile currency, and it's GBP USD according to me. I don't know about you. According to me, GBP USD is the most volatile currency, and you can see high movements. I mean, high volatility in it. A 100 pip movement is so common in, I mean, GBP USD. So, just okay. Now I get to your question. Your question was, if I lost the trade, I will be in debt with the broker in leverage mode. Guys, they are different things. Just okay. Okay, so guys, you have to be very, as I said, you have to be very calculative in your approach. You need to calculate the amount you are risking first. In binary options, you can risk about 5% of your account's balance, but in forex, I recommend to stick with 3 or 2 or 3% of your account balance. I mean, there will be significant gains over time. Okay, so when you have leverage and you are losing a position, you'll simply get a stop out by your broker, or simply it's called a margin call. Okay, in a margin call, what they will do is they will close all your positions. I mean, if you are losing a trade and your balance, you have leverage, your balance is dropping down, your equity, what we say, I mean, what you will get on the broker's pay, your equity is dropping down, and your margin is less than 30%. It depends upon the broker's policies. Some have 30, some have 35%. I mean, you can see the broker's web page for more information on that, but let us assume that it's 30%. When your equity is less than 30% of your free margin, then you will get a stop out, or you will get a margin call. In order to continue to have your positions, you need to deposit more and more. Okay, I don't think, I mean, this is a good idea, but you need to have calculations before you take a trade. And what I recommend is, don't trade heavily on one trade. Take two or three small trades, so that if one is going, opposite to your prejudice, opposite to your premonition about it, the others can build it up. So you can do, in the starting you can do small trades with different currencies. Don't invest a heavy amount in just one currency. So leverage, I've got into the leverage parts. It's very risky. I'm again emphasizing, guys, it's very risky. Even 100 is to 1 leverage is too risky. You can have 5 is to 1, 50 is to 1 leverage, but 100 is to 1. Even brokers offer more. They also offer 400 is to 1 or 1000 is to 1. Please be away from it. As I emphasize that you need to control your emotions of greed, you need to control, you need to have a proper mindset, you need to have a psychology of a trader. That's all, and this sums it all up. You need to be very precise. Okay, so you can calculate your risk reward ratio. If you are risking this much, how much you are getting, that is the risk reward ratio. Okay, so it's pretty simple in the binary options, but in the forex industry you need to have certain calculations. Uh, Frankly speaking, I hate mathematics, but from the time I'm in this forex industry, I'm kind of starting loving it, because without it you'll be all over. Your account may be blown up in a day or two. Getting to the charts, we get to our site www.mybosses.net. As you can see these candles, I talk to many people, and I have analyzed that many people don't know how to read the charts. So guys, in these charts you can see the red candles and the green candles. The green candles are the bullish ones and the red candles are the bearish ones. Bearish means the price opened here and it went down till here. Okay, so this is a down move and this is a bearish candle. In this candle the price opened here, it went down till here, again it could not hold this price, and again it went back up till here and went back down here. Okay, so I'll just open the document that I have prepared for you all. Okay, about it's a very simple illustration of the Japanese candlesticks. And mind you guys, the Japanese candlesticks, if you are able to understand this candlestick, if you are able to understand the price action, how the price moves on the chart, it will be of a great help. This may take time, may take time up to a week or two, but this is the foundation and we are constructing the foundation here. So let me move on with the Japanese candlesticks. Okay, here it is, body of a candlestick. So guys, you can have the colors of the candlesticks according to your own. I prefer to have green for the bullish, red for the bearish. So here it is like white for the bullish and black for the bearish. It's simple. As you can see, okay, the price opened up here, okay, and it went all up to here and it went down till here. So this is the real body. The opening price and the closing price is the real body of a candle. And these two wicks, you can call them wicks, you can call them shadows, you can call them whatever you want, a tail. Okay, this is the real body and these are the wicks. The price tried to go here and that price went up till here, but it opened here and closed here. Similarly, for a bearish candle, the price opened here, tried to go up, and then it moved down till here. Again it could not hold here and came back up here. So the real body of the candle is this one. You need to have a look at the real body of the candles, because the wicks, they are not much significant. I mean, they will be significant when you'll be learning about the reversal patterns or the types of candles. In this, it it's simple that this is, it opened up and went up, this is a bullish candle. It opened here and went down, and this makes a bearish candle. So let me proceed further. Okay. Okay, this simple, this is a bullish candle, white candlestick. This is a black candle, that means a bearish candlestick. So as I said, you can call the tail or the shadow, the wick, whatever you want to call it. You can call it wick, or I mean long lower shadow and long upper shadow. These are all illustrations of types of candles. You can have hammers, inverted hammers. These are all, I'll get back to it later. So just first of all, let me tell you something very important. So guys, we have three types of patterns. I mean, it's broadly categorized into three types of patterns. The Japanese candlesticks, you have the reversal patterns. Okay, when you are looking for reversals in the chart, you have the trend continuation patterns, or called as false exhaustions. Because what happens sometimes is like, if there is a doji, or there is a gravestone doji, and you are looking out for a certain reversal, okay, sometimes the price may continue, and that is why it is called a false exhaustion. The third one is consolidation pattern. You may have noticed sometimes the price like coming down and consolidating at a place. Let me just hop onto the chart if I can see. Yep, you can see the consolidation pattern here. It's like it's for the 1 day. Let me hop on to 30 minutes time frame. Okay, 1 hour time frame. Okay, guys, you can see a certain amount of consolidation here. The price is kind of consolidating here. It tried to move down, but again it moved up and consolidated here. So I'll tell you its I mean functions and all those things. Be with me. Just okay. I mean, I just wanted to categorize the candlesticks. I mean, we look when we know how to read the candlesticks. So we look for reversal patterns mainly. Most of the traders, most of the people, they look for reversal patterns. And sometimes, I mean, these are the most common patterns in the market. The trend continuation patterns or the false exhaustions are like kind of rare. I must not say rare. It happens very less times. So the consolidation patterns you can see. Okay, as I said, most of the patterns are reversal patterns. So like guys, you can see the candlestick chart here. The price is nicely moving down and down and down. Okay, the first reversal pattern we have is called the hammer. I mean, this candle is called the hammer. The price is moving down, it's moving down nicely, and we have a hammer here. Okay, you can see it has a small body and a long shadow. It means that simply the price is trying to move up and up. The traders are trying to move the price up. So this is a reversal pattern, and this means that the market will change its trend into the upward direction. In a downtrend, if you get a hammer, there are significant chances that the price will move up after that. Okay, let me tell you that these candlestick patterns are very helpful. So you need to have a look at them, and these are very helpful in the long time frames. Maybe you can say 1 hour, or if you try to find them on 5 minutes, you need to have like 15 to 30 minutes expiry in the binary options. So here is the hanging man. Like the price is nicely moving upwards, we have a hanging man here. Okay, and the price moves down. It's a reversal pattern. So this hanging man, it occurs here, and you can see the next two candles moving down. These are the reversal patterns. Okay, it's slightly elaborated here. The price is trending downwards, and you need to have confirmations. I mean, you cannot simply rely on the candlesticks. You may have another technical indicators, the relative strength index, or the stochastics, or the Fibonacci applied to your charts. You need to have confirmation, guys. Okay, so like you can see there, we have a hammer and the price is moving up. So this is our confirmation. The hammer, the next candle tried to like move up and move down, but it's kind of consolidating here. The next candle, it broke this neckline. So the this is the buy confirmation, buy above the open of the candlestick on the left of the hammer. Okay, I mean the price may, this may be a false exhaustion in a very heavy downtrend. So you need to have confirmation. This is our confirmation, and if this is a 5-minute chart, I take a call for 15. I don't recommend 15 minutes, for 30 minutes or so. Okay, the another reversal pattern we have is a shooting star. It's simply like the hammer we have here, it's inverted. Okay, so the shooting star, it's like the trend is nicely moving upwards, and we have this shooting star here. I mean, you can see the long wick and the small body. It's like the body's percentage is like 20 to 30% of the whole wick. So you can see that traders are trying to get the price back. I mean, they are trading puts, or you can say you're trading sell. This is a significant indicator for reversal of a trend. You can trade puts here only after the confirmation. You need to have confirmation. I am again emphasizing that you cannot simply rely on the candlestick patterns for your trading. The next one we have is like, okay guys, the doji, the butterfly, the harami patterns. Just let me tell you what is a doji. Okay, so these are the hammers, the spinning tops. A doji is simply it represents certain type of consolidation. You can say it represents indecision in the market. Okay, like the price tried to go up, and it tried to go down, and again it closed where it opened. There is very small body, and you can see this doji. You can see this one is a long leg doji, and you, and these are the reversals, the dragonfly doji and the gravestone doji. A candle which has no wick at all is called marubozu, and it's bullish Marubozu. This one is a bullish Marubozu. Okay, the W stand for white and the B for black. I mean, there's nothing confusing here. So just let me continue with the candlesticks. I was at Doji. Okay, I mean, I have done a lot of study from the past 2 3 days. I mean, I needed to revise everything. I have it in my mind, but so I have written down certain things. I have prepared this presentation for you. I'm trying to like help each and everyone out who is new in this industry. I mean, there's no doubt that we can make a significant amount of money here, but you need to be educated. Education is the key to success here. So I'll just, yep. I mean, the doji is like, it's unskillfully made, and it merely has a body, and it represents the indecision pattern. Okay, here we have the dragonfly, and the first here we have the gravestone doji. In the gravestone doji, what suppose guys, I mean, I'll just elaborate the Morobozu. suppose the market opened here, it went up to here, and we have no wicks in this, and it's also a type of continuation or consolidation, you can say. Okay, so just a minute, just a minute, guys. Yep, we are on to it. Okay, these are the dojis, and then we have the shooting star, we have the inverted hammer. I, I'll I'll just, yep, that's the inverted hammer. As I said, that it's kind of a shooting star, but the shooting star is you'll get, yep, the trend is moving upward. When you get an inverted hammer, the trend will obviously change, and the hammer, the trend is moving downwards, and you can see the nice wick here. The price is trying to go up, and there will be a reversal of up movement. I mean, there will be a reversal, a bullish reversal. Here it will be a bearish reversal. And the gravestone doji, you can say, the price tried to go up, and it came back nicely on the same level it opened. So this is also a strong reversal for a bullish reversal. And we come to here the bearish. I'll come to the harami patterns. Just let me first elaborate the butterfly, or you can say dragonfly, or whatever you want. There are different types of name. You can see the market is trying to push itself up, so here will be a bullish reversal. Okay, okay, so let me just come to the harami patterns. Yep, the harami patterns. Okay, what we have, just a minute, guys. Okay, what's the difference between an inverted hammer and a shooting star? Okay, I think I was not clear enough on the, guys. The inverted hammer, you will get it on a uptrend. I mean, it will be, just a minute. I'm just getting onto the presentation. Okay, so the inverted hammer and the shooting star are kind of same. Okay, you can see the inverted hammer and a shooting star. These both, they are formed on the last of a uptrend, or the inverted hammer can be seen. I mean, I think I don't have the pick here to depict it, but the inverted hammer can be on a downtrend. Okay, yep, you can get an inverted hammer on the downtrend. Just let me check what is his query. Okay, I'll just get back to the inverted hammer and the shooting star section. Okay, I mean, the formation is the same, but one is on the end of a, like a bearish move, and the another is on the end of a bullish move. That's the difference. Okay, now we have the, okay, I'll just elaborate the haramis. Okay, the, I mean, you can see that this is a bullish candle engulfing a bearish candle. I need, I think you need to understand what are bear engulfing patterns. I'll get back to the harami pattern also. So the engulfing pattern, guys, these are these are yep, the prices, you can see the prices moving downwards, and when this candle engulfs the previous candle. Okay, like you can see this candle and this candle, the bearish candle is engulfed by the bullish candle. So this is a nice indicator for a bullish move. And when you can see on an uptrend, a candle, it is engulfed by a bearish candle, it's a nice signal for a down move. I mean, You can wait for a confirmation. I mean, you can wait for the second candle to open and result in a bearish candle too, or the second candle here to open and result in a bullish candle too. These are the engulfing patterns. I mean, the this candle engulfs the previous candle and this candle engulfs the previous candle. This is the bullish engulfing. I mean, there is a bullish reversal, and this is the bearish engulfing. Here we have a bearish move. Okay, now we get to the dark cloud cover. Yeah, as in the dark cloud cover, what you can see is a bearish candlestick covering the previous bullish candlestick. You can see this bullish candlestick, and this is covering the significant portion of the previous bullish candlestick. Okay, it's like it's covering 70 to 75% of the portion of the previous bullish candlestick. The more close the bearish one closes near the opening of the bullish one, please mind my words, the more close the bearish one opens near the opening of the bullish one, okay, the more stronger is the signal. Do you get it? Okay, what I have got now, Charlie. Okay, I'm still not in yet. Please, have you forgotten to add me? I hope no. Okay, guys, it's been recorded. Just please bear with me, guys. I'm trying to get everyone on the board so that they can't miss this education. I mean, this is very important. Obviously, you can watch it later on, but just please bear with me. It's been recorded and okay, guys, I'm just getting back to you. Okay, I was on the dark cloud cover, and you can see the market is moving up. Here we have a bullish candle, and the next bearish candle, it like opened up here and it went down till here. Okay, this is the opening of the bullish candle, and the more close, I mean, the more close is the closing of this bearish candle to this bullish candle, the more stronger is the signal. Okay, so you can see there is a significant downtrend after this, and the vice versa of this is called the piercing pattern. You can see there is a significant downtrend. The bullish candle after this bearish candle opened well below the price. I mean, the candle must have opened here, it must have opened here, and it opened, you know, like 2 or 3 micro pips lower than this, and then it went up till here. It closed very near to its opening, and we have a significant uptrend here. These two, you need to keep two things in mind, that the close of this candle must be very close to the opening of this candle, and the same thing goes here. These are the two patterns, reversal patterns, that we have is the dark cloud cover and the piercing pattern. The next one here is, okay, we have the, you must have heard of the terms like morning star, evening star, the white soldier, three black cross, mornings. I mean, these all things. Okay, so what is the morning star? It's basically, we'll start with the morning star. You need to see three candles here. It's a three candlestick signal appearing in a bearish market. You can see it's a bearish market. Okay, so what you need to observe here is the first candle, it has a long bearish body. Okay, the second candle has a price gap. You can see the price gap of certain fractional pips here. Okay, we have a price gap between the first candle, and this is called the star, the morning star. This is the star, this is the first candle, this is the third candle. There is a price gap between the first and the star, and the star and the third candle. Okay, and the third candle is a long bullish body, or simply it's a bullish candle. Okay, it I mean it may close, it has to close somewhere around the mid or up of this candle. Okay, then there will be a strong reversal. This is a strong signal. I told you, you need confirmation. You need to confirm that there is a gap between this and this candle, and this candle closes well above than 50% of this candle's body. Okay, this is the morning star. The similar thing goes with the evening star. It signifies the end of a uptrend. The the applications are the same. You can see a bullish candle here, then there is a price gap, the candle opened and it's a star. Okay, and there is a certain price gap between this and this candle. So this candle opened and it closed well below the half body of this bullish candle. So this is a signal where we have a downtrend starting. Okay, the same goes with the simply these candles, these stars are replaced with the doji, and these are called morning doji stars and the evening doji stars. And let me get to the white soldier now, just a minute. Okay, we have the white soldier. Yep, the white soldier. Okay, this is, you need to have three long bullish candles. Okay, this one opening up here and closing here, the second one opening below then where it closed, and then it again went up. The third one opened below, then it closed, the previous one closed, and again it went up. These are the three soldiers. And you can see the market is trying to go down and again it's coming up, it's trying to go down and coming up. So after three candles we have a confirmation that yep, this market will have a bullish reversal. Okay, then where's the three black crows? Yep, the same thing goes with the three black crows. The market is nicely moving up, it tried to move down, again the price went up, and it opened with a price gap, again it went down, and it opened with a price gap, and again it went down. These are strong signals for reversals. Here we'll have a bearish reversal, here we'll have a bullish reversal. Okay, then we go to the abandoned baby. Yep, where's the abandoned baby? Yeah, okay guys, this one, the abandoned baby one, it's a very rare and strong signal. When I say rare, it's genuinely very rare signal. Here the doji, you can see the doji here. Okay, the doji, or it may be a candle with a small body. it, the doji or the candle, this is referred to as a star here. Like here we have the star, the same thing goes for doji, evening doji star, and here we have the star. Okay, the previous candle and the star has a significant price gap before and after it, not even the shadows being overlapped. Can you see here and here the market moved? The previous candle have the bullish candle, the previous candle we have is the bullish candle, and there is a certain price gap, and this price gap, you can see this is a significant price gap, not even the shadows are overlapping. And you can see not even the shadows are overlapping. The shadows of these candles must not overlap. This is a very rare signal, and it's great signal. I mean, it's a good signal for a strong reversal. The shadows must not overlap with one other. Okay, like in the bearish market we have a bullish reversal, in the bullish market we have a bearish reversal. Okay, the next one we have is a tri-star. Okay, the tri-star is sometimes referred to as three Buddhas, or there are different names, three mountains, three Buddhas, three three mountains can be like this. I mean, it's the same as the tri-star may happen here, or the three mountains may happen on the uptrend. You can see it's a genuine downtrend. We have the tri-star here, the three stars. I mean, these are the dojis. This has a different name significantly because the candles we have here are dojis, and there will be a significant uptrend, up move after this, after these tri-stars. These are also very rare patterns. Again we come to the harami patterns. I told you I'll just come back to the harami patterns. Okay, yep, just a minute guys. Okay, you'll be amazed to know that harami in Japanese, these are all Japanese candlesticks. These are very old. I mean, it the Japanese candlesticks have been in use in the market since very long. It's the oldest method of charting a price. Okay, so in Japanese, harami means pregnant. It's also an engulfing pattern, but you must have noticed that in the previous engulfing pattern, you can see this bearish candle is engulfed by this bullish candle. So it was like the previous candle has to be engulfed by the next candle. In harami we have this candle. Okay, the previous candle engulfing the next candle, not the previous candle being engulfed by the next candle. This is the main difference. You need to have the previous candle engulfing the next candle. Okay, so you can see the previous candle engulfed this candle. This is a uptrend, nice uptrend, so we can go to short here. Short means sell here, or trade puts here. This is also not a very strong signal for reversal, but it does reverse. I mean, I have used it personally. Okay, then we go ahead and we have tweezers with us. As it is written, this is a bearish pattern signifying a potential top. The tweezers are like when there is a consolidation. I mean, the you can see the price tried to went up till here, and again it's coming back. In these four candles, it's again it trying to go up, and like it touched this point but never crossed this point. It's again coming back and coming back. The shadows must comprise a minimum of 60% of the candle's total range. I mean, the shadows has to be significantly large and the body has to be small in these tweezers. And tweezers are also, I mean, it's my personal experience. Most of the time, 70 to 75% times they work out. I have used them. Of course, with certain more confirmations, but tweezers are, you know, like if you have these tweezers, these are like they signify a certain trend reversal of bullish behavior. I mean, bearish behavior. Sorry for my words. It's a it signifies a trend reversal for a bearish move. And here also, these these candles, these wicks, they have touched the same point again and again, and there's no significant body. And this certainly calls for a bearish move. And the vice versa, like if the candle's body on a downtrend if it has been like this body has been here and they must have long wicks, this would have been a strong signal for a trend reversal of a bullish move. Okay, so I think that's all for the candlestick patterns. I'll I mean, if you guys, any one of you have not been able to understand anything about the candlesticks, you can certainly PM me or ask for any help. I'll be happy to do so. But these are very basics of the candlesticks. There's no need to like cram this all up, and it's very simple. Once you try, you have your own charts, you have set up your own charts, you try to look for these patterns, you'll yourself see that yep, these work, these Japanese candlesticks work. Okay, I may have got a query, just a minute. Where can we download? Okay guys, I'll just okay, I forgot to like include it in the handout section. Okay, just to tell you, you can download these handouts like I told you about the brokers. I mean, certain requisites have been mentioned here about the brokers, and the mindset of the scammer, the problems you as a newbies face in the binary options industry, and of course the psychology of a trader is clearly underlined in the documents. Okay, okay, what does he say? They can even down. Okay guys, we'll just upload it on our website and you can download it from here. We'll just upload it on our website. Please give us some time, and after this webinar I'll try to upload it as soon as possible. I think you'll like it. Okay, brokers and scammers. Okay, all this is will be available on our website, no problem. Okay, okay, so we are done with our candlestick patterns. Okay guys, I'll just make this document available on our website. Even now we have a document about the candlesticks on our website. You can just go on and see. Okay, just let me check. We go to our website, we go to the education part, and yeah, we have the Japanese candlesticks PDF, and it's more colorful than this. I mean, I prepared that for myself. I prepared it today because before a presentation I need to know, I need to have something handy with me because I'm not so fluent with English. I'm not so good with English. So, you know, okay, we're just done with the candlestick patterns, and I think we have no questions. The forex part is done. The leverage, the pips part, the margin call. Okay, and what else do we have? This was about this webinar is about the very basic information you need. Okay, so I'm not going like into very much detail, or I'm not trying to you know dive deep into the market right now. This is how education works. You'll get educated slowly, so you need to have patience, and over time, with practice and practice, you'll be successful. As it's written on a secret FP page, success is inevitable with us. It's obviously inevitable with us, guys. You just need to concentrate, you just need to practice, and there's nothing else. You'll be successful. Okay, okay, so guys, I'll just break down the whole thing into two or like 4 or 5 points. So how do we start trading? The very first thing is getting educated. Like you are getting educated right now, because I have seen people, they simply jump into some signals group, they try to take on the signals, and then they have significant losses because they don't know how the market is going. That is why I always recommend to have your own charts open, because you cannot risk your money on someone's prediction. You need to see it yourself, you need to analyze it yourself, so that one day you can trade yourself. Okay guys, about the trading platform, I don't recommend, but I have been using MT4 platform for the charts. You can also go to freestockcharts.com, or simply I say you just go to our website and click on the live charts, and you will be able to see the charts. Okay, like whenever you are, I mean, you are into a signals group, whenever you get a signal, you just hop on to like mybosses.net, and then you can see the price here. You can like it's set by default it is set to 1 day. You can simply click here, like AUD, USD. They have all the currencies. You'll get everything you need. Okay, these okay, this is the chart for AUD USD. You can go for 30 minutes. Here we have the 30-minute charts. You can apply I mean, the volumes are already applied, so you need to have an eye on the trade. Like you can see, can you see the consolidation pattern here? Okay, the market was trying to consolidate and it was not going below this point, and you can see this was a strong support level here. This is a strong support, and when it broke, now it has become a strong resistance level here. You can see the price never went above this level. Even you can see that these candles, they closed at this price level. So the supports and resistances, they also play a very vital role in this, like analyzing that chart, the technical analysis. Okay, the main thing you need to do while analyzing a chart is do technical analysis and fundamental analysis, because there are many things. And also just a minute, we have for your fundamental analysis, we have the economic calendar available on our website. We have built it keeping in mind all your requirements. I mean, okay, I think my internet connection is a bit slow, so it's not showing up right now. Okay, you can see the economic calendar, you can see the news, because whenever a strong news is out, like it's a 3 bull move or a news, or a 2 bull news, you'll see the markets, they will not observe any rules or anything. They'll just go up or down. The volatility will be high. So before trading news, you need to know that is it a news with a high volatility, or is it a news with a low volatility. I mean, you can go with the low volatility news. There's not much significant move in the markets at that time. But with high volatility, when you have NFP, like non-farm payrolls, the GDP, the home sales, etc., you'll see a significant move in the market. It just moves up or down. So you need to be aware of when the news will be out, and you need not to trade at that time, because you can lose a certain amount of your account balance. So okay, we have covered the basic difference between the forex and the binary options. So I just wanted to give you 3 or 4 main points. I mean, the first one was getting educated. You are getting educated right now. The second one is finding a broker. All of you, like, you must be having a broker account for the binary options or the forex. If you trade forex, as you said, you are newbies, so you must be having some binary options account. So I just wanted to tell you that we have our recommendations here, and I just wanted to clear some doubts about the recommendation. Guys, CT option, you just click on it and you'll see that uh, they accept traders all over from the world. It is non-regulated, but they are, just wait a minute, the content, yep, they are non-regulated, but they are a very reputed. They have their own name built up in the industry. They are very very old in this industry, and they have hassle-free withdrawals once you have verified your identity with them. The minimum deposit is $250, and the best part is the minimum investment is $5. Again, they have turbos from 30 seconds to 10 minutes available all over the day on a range of currencies. You'll not find this with any other broker. I bet. I bet on this. The binary options, they are available from 15 minutes to 30 minutes or 1 hour all over the day. So there's no complaint of not having expiry times or having much high minimum investment per trade with them. The cherry trade, they have stopped accepting US clients right now, and but they have the options like rollovers and buyouts. The 24 option, they also have a good reputation. I mean, they are CISEC, okay, sorry, they are CISEC regulated, but the main problem is here you will have to risk much. The minimum investment per trade is $24. IQ options, we have recommended only for demo accounts. You can demo here and you can trade. Okay, also because they have minimum deposit of $10. Cherry trade have minimum deposit of $200. 24 option has minimum deposit of $250. So for a demo or for a small investment, if you have a very small investment, say 10 to 20 or $50, you can go with IQ options. But the drawback they have is that they offer different payouts according to different time frames. They also have turbos available all over the time. Okay, and this was about the second part about finding a broker. We'll be updating you about the forex brokers, or I mean, we are working on that. We'll be providing signals about the about the forex too. When we start forex trading also, we'll be providing the forex signals too in the group, and you'll demo them first, and then when you have your confidence build up with us, then you can trade them on real accounts. But I'm thinking of having a different group for, I mean, there will be a mess if we have the binary option signals group and the forex signals group. It will be hodgepodge. So I'll just update you all on that aspect after some time. I mean, this we are just, the third thing you need to know is when you start reading charts. Okay, when you start predicting the market, you need to find your style and strategy. I've seen many people talking about, okay, we need to learn this strategy. How do you trade? Can you please show us your strategy? Guys, it's, I mean, I don't believe in this, because when you trade, you have your own style, you have your own strategy. Okay, your strategy is your own strategy. You must not feel comfortable with any other strategy. So I need you to understand that please practice and develop your own strategy. You must, like, have your own style. You cannot just copy others. You're not a copycat. And demo before getting on with real money. So in the last, you make real trades and make money with proper risk management, discipline, and you must keep your emotions out of trading. Okay, guys, so I have explained this one also. I have explained the leverage, this part. Okay, so is there any queries, guys? You can please PM me right now on the FB, I mean on my FB, that is Jerry Williams. So I'll be able to answer your queries. And okay, okay, just if you have any query, okay. And I'm just, as I said, that this was a start. We are just starting from the scratch. So I hope you all enjoyed this webinar. It has been about, like, how much time, I don't remember. Okay, it started at 13. It has been an hour and a half. Okay, so I'll just open another poll for you all. Where's the second one? Polls one of two. Just wait a minute, guys. I because we are just starting, and I have also started this group, so I need to ask all of you how you are feeling in this group. Or, I mean, is there anything else? Okay, Diego. how to read the signals. Okay, I appreciate your question. This is the question that many of traders ask me. Okay, Matthew, good presentation. Thank you, Matthew. I'll get back to you. Okay. Okay, guys, about the signals. I really appreciate your question. Okay, about the signals part. Just wait a minute. Mm-hmm. Yep. So you can see, guys, most of the times, I mean, it has been a week and I have been given, I have been like trading with you all, and we have quite a hard time in the first week, as you know, like we didn't have much traders. I was trading alone, so I had a pressure on my mind, but now we are getting help. I mean, I'm very happy to have you all. I'm getting a good response, and this motivates me more and more to work for you guys. Okay, okay. So like this one, the Euro USD put turbo. Guys, first thing I want you to know that please stick with the strike rate given. Okay, strike rate and the expiry time given. If this is given turbo, that means you'll have to place it for 21 GMT. Okay, suppose if the time now is 20:56 GMT, you have 4 minutes. So if you have 4 minutes expiry, that's okay. But if you don't have 4 minutes expiry, I mean, if you can wait till the time is 20:58, you obviously have 2 minutes 120 seconds expiry. If the strike rate is still there at 20:58, you can go with it. Otherwise, please don't touch turbos. I always emphasize that you can have loses while trying this. Okay, you need to be disciplined. Okay, like this was cat JPY put, and the strike rate was given and the expiry 21 GMT. So when you get cat JPY, what you'll do is what I suggest you to do is, if you have your MT4 charts, you simply go to your MT4 charts. Or because right now I don't have the MT4 charts available in this computer right now, so I'll just go to the live chart section. Because you need to have a look at how the trade is going. If okay, the chart section. Okay, I'll just open here cat JPY, cat JPY, Canadian dollar and Japanese yen. Okay, and you can see that there is a strong resistance here at 92.00. I yesterday I gave the signal cat JPY port strike rate 92.000. And if you see, I mean, you must have your on support and resistance levels, you must drawn in the charts, and you can have your own analysis, like is there a fundamental news coming. I mean, you need to be in touch with the trade, and always be in touch with the comments of a particular trade that you are following. Many times I have commented for a new strike rate, I have commented for a new expiry, and people were not able to catch the second signal, and obviously the second signal ITM. This week so far has been so good for me. I mean, all the EODs I have given, they all ended in the money, and I'm having pretty much like more than 75% win rate this week. I hope you all are profiting with me. So the first thing you need to do is you need to hop onto your charts, you need to see how the trade is going, and you need to see when the strike rate comes, you know, like around the 92.00, you can hop onto your broker's page and simply put the trade for, I mean, if it is a call, you can call. If it is a put, you can trade a put. So I again emphasize, please be more specific about the strike rate. If you don't catch a signal, please leave it. If you are not able to catch the strike rate, please leave it. There are more signals coming. How to use the stochastic and resistance and support line to trade. Okay guys, right now I don't have the MT4 charts in this computer as I told, but the support and the main thing about support and resistance. Okay guys, if a price touched a certain level 3 or 4 times and is bouncing back, like from here the price is bouncing back, the price bounced back, the price bounced back, and we may call this as a good support level because you can see the price is bouncing back again and again. Okay, and when it broke this support level, boom, it comes down. Maybe there is a news at this point, but you can see that it was bouncing again and again. You'll have set it on your MT4 charts because I cannot set it right here. I think I which okay. uh, I'm sorry guys, I'm not handy too much handy with this chart with these charts, so I'll just carry on with the support and resistance lines, and you can see the price, as I told you, that it is having a nice resistance here. Okay, here, because it is a 1 day chart, so whenever you go on to draw support and the resistance lines, okay, I request you to start from the bigger time frame, not like 1 day. You can start from 1 hour or 4 hours time frame. That is more convenient. I mean, you get more strong resistances and more strong support lines. Resistance is like the price is touching this point again and again, and it is like once it went up and again it went down. We need a confirmation. If the price has broken this, we need for confirmation for one candle. You know, this candle closed well below this resistance, and again the trend, it fell down into this support, in this resistance level. Just let me, okay, but if required I could provide you access of my computer for MT4. Okay guys, we can, okay, for MT4 charts, but will I be able to, like, hover the arrow on it? Okay guys, we'll have the next webinar for this. I mean, I'm just demonstrating you these things, and I'll get into more depth and detail of these things in the next webinar. As I said, that I don't want this webinar to be a heavy dose for you all. You'll, if you are able to digest this much, then we'll be starting again next week with the webinars. If you have any queries, you are free to PM me, or you can PM me with your Skype address, and I'll get back to you on Skype. I mean, I'm here for you all. So you, Matthew, you wanted to know about the support and resistance. You can see that this, okay, not this one, it was a good support here, it's a good resistance here. Okay, can you give us a live example of how you cover fundamental analysis? Yep, sure. I told you, just go on to the economic calendar. Yep, it, you, okay, we go to the economic calendar. Okay, just wait. Okay, it loaded. Yep, today is 30th. Okay, 30th. Apply. Mhm. Okay, guys, we have the news for the 30th October today here. Okay, so what I do is, first of all, I see, is this a two bullish news? Are there two bulls, or one bull, or three bulls? I mean, the more bullish is the news like this: JPY, BOJ, Bank of Japan's press conference, and this means that this is a speech made by the Bank of Japan's governor, or I mean, like the chairman or something like that. So when this type of speech is there, I'll not be trading JPY pairs, because you know with certain statements, the volatility in markets, it rises and falls. Okay, so I don't mainly, like the FOMC was Federal's Open Market Committee meeting was there, FOMC, and it was like the chairman of Fed, Yellen. She was interacting with the traders, and at that time there is a high volatility. I mean, the speeches, uh, the traders, they are trying to just catch one or two main outputs from that speech, and upon that the volatility increases or decreases. So I don't trade while there is a speech. I just trade when it, like GDP, like you can see the quarterly GDP came and it was the same. And also when the news is like the two news came at 8, okay, 8 GMT, and the news was, like not positive, not negative, but the same. So the markets may react with a slight volatility, or maybe not react at all. So what I suggest is to, what I do, I mean, is only I trade the three bull news, like here euro. The CPI was out there, the yearly CPI, and it was negative. So what I would have done is I would have simply traded, I would have drawn my support and resistance levels on the chart, like on the Euro USD chart, and I would have waited for the, like it's a negative news and the bearish candles to hit my support. You know, I would have taken support levels from like one previous datas, like 1 day chart or 1 week's chart. So, with more higher time frame, you get more stronger supports and resistances. That is how I trade. Or like what I do is I allow the market to fall. Okay, the news came negative, the market will be falling, like euro USD. Okay, the euro will be falling, and I let it go till a certain support level that I have predetermined, and then I give the signal. This is how I read. I trade only three bull news, and you can also trade three bull news. I mean, there is a whole scope of volatility in that news. So is there any other query? Am I clear? I mean, am I able to make it clear enough? I i can see a chart for support and resistance. Oh buddy, you're not online right now. Okay, please don't worry, this is being recorded, you can watch it later and later. Okay, I mean, many times. Okay, Diego, am I clear? Yep, all clear, thanks. Okay, so guys, I have tried to make it very simple. I have tried to make it too simple for all the beginners out here. If again, I'm asking, if there is any query, you are free to PM me right now and I'll answer your queries, because the chat is not working. Okay, what do you think of trading binary options using Hikanashi? To be frank, I have never used Hikanashi candlesticks, and I have no experience with them, so I cannot just suggest you anything that I don't know. I'm sorry, buddy. I have never traded. Okay, thank you. Any other queries? Any other queries, people? Okay. Whole section. Yep. Okay, the question. Just a minute, guys. Just a minute. Okay, guys. The second poll I'm going to launch is about the forex trading. You'll just, yeah, you are viewing, kindly answer the poll according to your convenience. Okay, are you interested in learning forex? Because all this is connected to forex. Okay, I'll give you 30 seconds to answer. 53% have voted, as I can see. Uh, Okay, most of you are interested. We'll go, I mean, we'll take baby steps. I know it takes time. I just want you to be with me and we'll be successful. As I said, there's nothing to lose. You will only gain in leaps and bounds. Okay, guys, I'll be closing this poll in another 20 seconds. Okay, 57, 58, 59. Okay, so 92% of you answered in yes. Okay, we'll be starting with this. How does the candlestick indication works accurately with forex trading? Okay, Matthew. Uh, just a minute. In forex trading, you know the charts you use, I mean the charts we are using here in the live chart, these are all forex charts. The you can see the slightest change in price in the forex market here. So the candlestick patterns, as I said, you can see engulfing pattern here. This 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 bullish candle, it engulfed the previous bearish candle, and you can see a nice up move here. Okay, you can see a harami here. You can see this previous candle, it has engulfed the next candle, and see the move here. And this is how, I mean, you'll get handy with it once you start reading the charts yourself. You need to look for opportunities, you need to look for like chances you have in the market. Okay, I can't see the demonstration. Okay guys, many of you are having screen share is gone after pool. Okay guys, show my screen. No. Okay guys, can you see the screen now? Hmm, showing screen. It states that it's showing the screen. Can you see? Okay guys, I'll just get onto it once again. Like, okay, this is the chart, and I stated about the engulfing pattern here. You can see the previous candle is engulfed by this bullish candle, and the next two candles are nicely in the bullish move. This is a 1 day chart, so obviously we'll be going for like 2 days expiry. And you can see this is a nice harami pattern here. The previous candle is engulfing the next candle. You can see it starts here and ends here, but the next one starts here and ends somewhere around 70% of the previous candle. And you can see the slide, the nice down move here. Maybe it's because of news or something like that, but you can see this candle, it moved down, and then these big candles must be, there must be some news. That is why it moved down so rapidly. You can find other, you can see engulfing pattern here also. Or I mean, when you start having a look at your own charts, you'll see it more constantly. Okay, any other queries? Matthew, am I clear? Am I clear now? You'll get handy with it, after some time, after month or so. I mean, if you're a fast learner, you may learn this in 2 3 days. Not 2 3 days. That is too fast. Okay. Okay, guys. Any other questions? Okay, what time frame you? Just a minute. What time frame you set up the charts for the analysis of binary options? Okay, guys. I have 15 minutes charts and I have 5 minutes charts, because we look for expiries for half an hour and an hour. And the turbos that I give are, they are based on the stochastics and the support and resistance lines. If I use a 5-minute chart, then I simply go for 30 minutes expiry. If I'm using a 15 minutes charts, I'm using like an hourly expiry. So next time I'll be sharing my MT4 screen with you so that it will be more clear. This was a webinar for very basic information, your doubts and all that things. So okay, so how can you manage the event in the news with your trading? Okay, guys, I told you I wait for the market to hit certain support or resistance lines. I don't trade straight away when a news comes out. I wait like 15 to 20 minutes and like maybe for 30 minutes. If it hits that point, then I give out my trades or then I trade myself. It is not that I trade straight away when the news comes out. Am I clear? Okay, we have Quentin unit. Okay, guys. Any other queries from anyone? Okay, clear. I'll be getting into more details, into more depth with the charts and everything else in the next webinar. I hope you all enjoyed this webinar, and I I just I told you, will this group is all about trading, helping, sharing, and motivating our friends. So just let me go to my group page. Okay, just a minute. Okay, guys, we are here in our group. Just a minute. Guys, those who will be newly registered in the group, I request you to kindly read the description box and the pinned post, because I have, like, made some points clear in these pinned post and the description section. I clearly mentioned that we'll be starting from the scratch. It's not like straight away jumping into the sea when you don't know how to swim. It's and this doesn't offer any BS like get rich quick or so. So please be patient with our group and you'll be in constant profits over time. And for the motivation, I mean, you'll get many naysayers. People may say that Forex is a scam, you can't make money out of this, and this is all BS, I believe. I remember one thing said by a motivator. He said, when a car starts to move, dogs start to run behind it and bark. After some time, when the car attains speed, the dogs are left behind. You see, it's when we start to move that we need the maximum motivation. So I need you to start. You need to start with motivation. And if we stop, the dogs will also stop. So please don't stop. But if you keep moving, dogs are left behind. Interestingly, if you go out of reach, these dogs will eventually find some other cars to bark on. So the bottom line is, guys, the cars will keep on moving and the dogs will keep on barking. So please don't listen to others, listen to your intuition, listen to your heart, and listen to what you are doing. Okay? When do you post signals in the demo trade? It means the signal is not. No. The demo trade means please try them on demo trade, because the strategy we are using right now, it's not like strong enough. We are testing that strategy, or the trader who is posting demo trades is new and his he has not built his confidence in the group. I mean, if he has a weekly success rate of more than 70% 75%, obviously he's a good trader and he will be allowed to post real trades. Okay, demo trades means simply that we are testing a new strategy or the trader is new. Okay, any other queries, guys? Okay, 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 guys. So I think we're done with the webinar for today. If you have any queries, if you have anything, you can PM me. And for those who will be joining our group, I welcome them. I welcome them to this amazing family. Please do invite your friends to this amazing group. We are just building up the foundation of this group so that we will be the best family of traders in this industry. I have no rules and regulations, nothing like that. There are no colored stats. You're free to express yourself. You will find everything in the pinned post. So please feel free to contact me anytime. Please feel free to ask any queries. Please feel free to comment anything about me, about my group. If you disagree with anything, I'm not a dictator here. So I hope I'm done with today. Any queries will be okay. Okay, thank you guys. So it's just my call for the day, my call for the webinar. Have a good day. Enjoy. Okay. Are you going to do the videos for when we can make it? Yep, guys, this webinar is recorded too, so you can see it's it always will be recorded. Okay. Okay, guys, so I'll just bid you a farewell. Bye bye, guys. Enjoy and ping me up with queries. You can join our FB group through our page. You can just hop on to www.mybosses.net and hop on to our recommended brokers. Like, you can open your account with any of the brokers and you'll be up in the group. You can ping me up on Skype. You can ping me up on my FB, that is Jerry Williams. You can write to us on our email, that is care at the rate of mybosses.net or support at the rate of mybosses.net. You're always welcome with your queries. We'll be happy to answer your queries. Thank you guys. Have a good day. Sleep well. Bye bye, guys. Bye bye.